Day traders, you are leaving money on the table if you are not doing this. If you are day trading without top-down analysis, you are literally setting your hard-earned cash on fire. Top-down analysis is the secret weapon that separates consistent traders from those constantly chasing wins. It gives you clarity, boosts your confidence, and helps you spot high probability trades with massive profit potential. What's the best part of it? You don't need to change your entire trading system to see results. Just optimize what you are already doing. In this video, I'm breaking down my top-down analysis strategy, the most efficient and effective way to double your performance, cut down your working hours, and turn small day trades into bigger wins, all without complicating your process. By the end of this video, you will know how to apply a full top-down analysis strategy, how to drastically reduce your screen time while finding better trades, and also I'll be showing you how to boost your win rate without changing your core strategy. Let's dive in. Step 1 is to start from weekly time frame. Even though you are a day trader, I'll tell you from 10 years of experience that starting from weekly time frame is very important. It will give you an edge or an insight to know what might happen in the coming weeks. So let's take this for example. We can see that this was previous week and that this was last week candlestick. So we have an idea that okay, this coming week there's high probability that the markets might go up. So that is one, and it will help you to prepare that okay, in this next coming week, even though I'm a day trader, I'm expecting the market to go up from Monday to Friday. So you have an insight. And also on weekly time frame, there's what we call inefficiency and efficiency. So anytime market breaks a structure, either be it the resistance or support, one thing you have to look at for identify that candlesticks that took out that structure. I've been using this strategy for years. When I started, I was having problem. At times there will be a retracement and or pullback, and the market would not touch my either sell limit or buy limit. So what I do is first on a weekly time frame, identify the candlestick that took out this structure. In this case, this is the structure that was broken, and I will take this into consideration. So the secret is to mark your 70% of the candlestick. So most people they'll put it around 30%, 50%. So it won't get to touch your order. So set it at 70% of that candlestick. And if it's an efficiency candlestick, at times it might come down to the full. We might have a full retracement, which is around this. So we'll be looking for an opportunity to buy. In this case, to buy around this area. So if you look at markets, one thing the secret I will show you guys is anytime market break a structure, 70% most times it come back for that inefficiency candlestick. So in this case, we can see what happened. It came back, touched it, and started going up. So if we are to look at this, there was a structure here that was broken, and this is the inefficiency candlestick. And I will tell you, mark the 70%. Okay, 50% might not be too cool. So if you mark the 70%, you can see that the market came back. It took a while, but it came back to that 70% before it started going up. If we move down to maybe this level here, also we can see after breaking this structure, what happened? It came to almost 70%. So it's a secret. Either it's on weekly time frame, daily time frame, 4-hour time frame. You have to hold this secret tightly. Okay. And here also, what do you notice? This is a structure that was broken. The market came back and tested. What's here? It came down to the full almost 0% of it, not 70%. But if you pick 70%, it's still okay. But as a day trader, you don't do swinging. You don't use a weekly time frame for your entries and all that. But it's to give you an idea what might be happening in the market. So in this case, when this market came and touched this 70%, I will have an insight that okay, though I'm a day trader, the coming weeks I will be buying. And you saw what happened. It sold. It bought heavily. People bought this. In this case, it was gold. And here also the same thing. The structure was broken. 70%. It came back last week. The market went up. And on weekly time frame, by looking at this, is a piercing reversal candlestick pattern. So there is high probability that the market might go up. And the last thing you have to note on weekly time frame is your levels. Important level. You have to mark your level. So next week there's a supply level or resistance around the 2954.52. So if you are to be in this market as a day trader, no matter how you start from Monday and all that, you should know that there's a level at this side that the market might react to. So this will give you an overview of the market as a day trader. So the next time frame we'll be moving to is 1 hour time frame. So this is 1 hour time frame. So the first thing you have to do is to look for that area we marked on weekly time frame. This is the area we marked on weekly time frame. And as a day trader, your analysis mostly is on 1 hour, and you use 15 minutes or 5 minutes for your entry. Basically, that's what I do. And if you look at this is 1 hour time frame, like I said earlier, and the same strategy of that inefficiency still apply to your 1 hour time frame, like I told you guys. So look at this structure was broken, and what happened? It came back to test it. The recent one that happened last week also, this was broken. If I take 70% of okay, this was the structure that was broken, and this was the inefficiency candlestick. So 70% of it should be around here. So let me drag this to that area. So if I picked like 70% of it, you can see that the market came back several times to test this structure. So on weekly time frame, we have a hint already that this market might be bullish. But currently, what we're seeing on 1 hour time frame, we are having a ranging market. Market is moving sideways. So for our 1 hour time frame to align with our weekly time frame, all you have to do is to mark this area that the market is ranging. We have an expectation already on weekly time frame that the market will be bullish. So all we'll be waiting for, if it breaks this, there will be for breakout confirmation. The market might come back to test the inefficiency candlestick or come to the full length of its efficiency before going up. So we know that, okay, if we are going to trade this next week, our target is around 2954 for the whole week. So this is a very huge advantage. You are not just trading blindly. You have your important levels on weekly time frame, also on 1 hour time frame. You want your 1 hour time frame to align with your weekly time frame. This is a very huge advantage. And if we move to 15-minute time frame, you can see that it's almost still the same thing. So all we'll be waiting for is the market to what? Break this structure. And you can see, like I stated earlier, the market is ranging. So if you want to trade this, you can. If you want to trade this, you can do it. So on 15-minute time frame, as an intraday trader, you have to take your trend line very important. So what you'll be waiting for is the market to come back and touch this trend line, and your target. If you want to trade the ranging market, your target should be around this area. So immediately market comes back to this trend area, you look for an opportunity to be in the market. And also here, if we move to 5 minutes time frame, you see that a structure was broken, and likely the market might retest that structure or that inefficiency candlestick before going up. So you can make use of that advantage. And on the 1 hour time frame, your risk to reward ratio, it's very important. So if the market is going to break this structure and go up, let's see how much our risk to reward ratio. Let's have a very good one. So let's say your entry should be around up here, then just an estimation until the market plays out. That is when you can release it. But let's have an idea. So if we take this trade and our entry is around this area, our stop loss is here, we can see the risk to reward ratio is 4 to 12, which is not bad. But your entry should be based on market breaking a structure. You look for a level. If it breaks a structure and it gives us another higher low, that means your stop loss should be below the next higher low. So what I'm saying is, if a market break a structure, sorry, so this is a market, and it breaks this structure, and you believe that your inefficiency candlestick, let's say, so it means, sorry, this is around this area. It means you want to get into the market around this region. So your stop loss should be somewhere below this higher low, this last structure here. Okay, it's very important. And as it continue going up, you can trail your stop. And in the case that we are having a downtrend, so the same thing applies. So you believe the market will come back for a retest before going down. So what you have to do is, first, your stop loss will be here. Then if you confirm this that there was a retest and the market now is going down, then you can shift or move your stop loss down. The same thing with buying. So this is a very simple strategy to follow. Like I said, start your analysis from weekly time frame. So if you start from weekly time frame, it will give you an idea of what might happen the coming week. And in this case, we can see that there's high probability that the market might go up. So target have your level here on weekly time frame where the market might be heading to, and there's a resistance or supply level here. That is why we marked this area. And also we can see that the market started from this region. We can also mark it in case the market start ranging. So this is weekly time frame. Though you are intraday trader or day trader, you don't use weekly time frame, but this will give you an idea of what might happen for the entire week, Monday to Friday. So you should know that it's more of buying than selling. Then we move to 1 hour time frame, which you'll be focusing on. So this is the 1 hour time frame. We can see that it has been up, but currently there's consolidation. But you know that the market will be going up. And also, like I stated, if you want to trade the range, you can trade from this support level to the resistance level. But majorly, what we are looking for is the price to break this. But as an intraday trader, you can make use of this opportunity as well. But for the whole week, what we are expecting is the market to continue going up. And let's look at the area we marked. This is the area we marked that the market might be heading to. So if you are buying, there's a bit of confidence because you started your analysis from higher time frame, like weekly time frame. So guys, yeah, I will be dropping more videos to tell you guys how to have a proper risk to reward ratio as a day trader. So all you have to do, the favor you have to do, is just to subscribe and like this video. And if there's any pair you want us to analyze, you can also give us that pair in the comments so that we can look at it together. Thank you and have a lovely week.